Hey, what is going on everyone? Welcome to another video. This one is going to be a fixing series which I've decided to cover your questions and your doubts about the higher time frame, the intermediate time frames and the lower time frames. The first video will cover the fixing your high time frame, which will include the daily buys, the weekly profiles, the further price delivery, the TTrades Fractal model and the MMXM model, how to identify buys with that. And this will be all on the daily chart. And in the second video, then we will talk about the intermediate time frames, like the daily profiles, the established high or low of the day, how to confirm swing points, how to trade continuation away from high or low of the day, and things like that. And in the third video, we will cover the lower time frame entries, how to not get stopped out by manipulation, how to confirm the true order blocks, and which time you should trade. So with the first video, we'll be focusing only on the daily chart. Now the introduction, as you have seen in my previous video, as an intraday trader, we should know the direction of the next steady candle. It is very important because if we don't know where the daily candle is going towards, then why are we trading the lower time frames? You have to know direction of the daily candle. Otherwise, you have no business placing a trade. The first component we will be using is the TTrades Fractal model and the MMXM Next Day model, which are almost the same thing. It uses the idea of the swing formations. The market cannot operate without a swing point. Every further price delivery is starting with a swing point, and the market is printing a swing point and then continuing in certain direction. If the second candle of the swing point closes inside the range, then you should expect the third candle and fourth candle to expand in the other direction. Let me show you in the schematics. We have this candle 1 and then candle 2 closing inside the range of the previous candle. This closure doesn't mean a pattern. It is a lower time frame reversal, expansion, meta expansion. So it means a change in the trend and lower time frame change in the state of delivery. Then the third candle should expand in the direction opposite to the swing point formation. Like we have a reversal, then we would expect a continuation day. And also for the fourth day, we should go higher if the draw on liquidity isn't reached yet, and for that we would use the 50% of the previous candle's range to expand higher. Why we are using the 50%? Because if the price is going beyond the 50%, it means it won't be an expansion candle, or it could invalidate the idea. So we would use the 50% of the previous candle's range to then expand higher. And then same for the fourth candle, we will use it 50% to trade the next candle. And if the drawn liquidity is reached, it invalidates the idea. And the maximum expansion days are 3s, because after 3 days of expansion, we are getting another further price delivery. Now, failure to continue, in this case, we had that candle 1, candle 2 closure, a lower time frame reversal, then candle 3 expansion higher, but the candle 4th failure to continue higher. Instead, it took the previous day high, create a large wick, and then expanded lower. So it means it is a reversal to the downside. Either we will trade the continuation lower, or the idea of the bullish buy is now invalidated. Now the second component is the further price delivery. This applies to every single time frame. This is fractal. The market is operating through the further price delivery. It is transitioning through every phase, and it is operating that way. Now your job is to identify the current phase and trade the next one. For example, if we are in a consolidation, then we should wait for the consolidation range low or high to get manipulated and then expand in other direction. So as you can see, we have sell stops and buy stops. The market manipulated lower, took all the sell stops, then expanded higher in the other direction. We should trade that continuation higher. Now the next phase is retracement. The retracement phase is simple. When we are expanding after maximum 3 days or after reaching a certain objective, we should expect a next further price delivery. How do we know retracement? Retracement often occurs at the fair value gap or the discount of the range. We expanded higher, then retrace toward this fair value gap, and followed by expansion higher again in the direction. So when we are retracing, how do we confirm it? After reaching a fair value gap or a point of interest, we will form that swing point and then expand in the other direction. You can trade this candle or the continuation higher from that. Now the third further price delivery is a reversal. A reversal is important one. When we reach into an objective and we expand through it and expand back inside, this means a V-shaped reversal, and now we are trading continuation higher. If it is failed to expand higher and retrace lower, that would be a retracement path, but instead we expanded and then expanded in another direction. That means a reversal, and now we will be continuing higher. And also every phase of price delivery is leaving a reversal on the lower time frames. Like for example, if we talk about the consolidation and manipulation, this candle is a reversal on lower time frame. This retracement followed by expansion is also a reversal on the lower time frame, and expansion mid expansion is also a reversal on the lower time frame. Now we will go into the next component. The next component is the internal range liquidity and the external range liquidity. The internal range liquidity means the fair value gap, and the external range liquidity means the swing high or swing low. In a trend, the price is always transitioning through these two. The price is retracing into an imbalance, a fair value gap, and then reaching back towards the external high. This is how the trend is forming: higher high, higher low, higher high, higher low, retracing, expanding, retracing, expanding. And the second is external to internal range liquidity. The market reached a high, consolidated, then manipulated and followed back into the internal range liquidity. And also the internal to external range liquidity is the high probable move, because in retracement pairs, when we are retracing to internal range liquidity, we don't know how rate of expansion we have or how much we would retrace towards that internal range liquidity. And the external range liquidity, we can say that we are reaching towards the ERL or the external liquidity, and we can trade the expansion away from that. The weekly range profile, this is not a magic, this is the historical formation of the weekly candle. Whether the weekly candle will be an expansion candle, a reversal candle, a consolidation candle, so it can be determined through the weekly range profile. We have the first expansion profile, which includes the classic buy or classic sell when we are creating the high or low of the week on Monday, and then we are expecting the next days to expand higher. In this case, Monday traded lower, Tuesday formed the swing point, reversed, then Wednesday and Thursday expanded higher, and the Friday created the other end of the weekly candle. For example, when we are opening, then creating the lower wick, expanding higher, and then the Friday is creating the opposing wick of the weekly candle. This is not occurring every time, but this can be an opportunity to get back the weekly range to print that other side of the weekly candle. Now we have the reversal profile when the first days of the week are expanding in one direction followed by expansion in other direction. It can occur at Thursday or midweek, which is Wednesday. So here we have Monday and Tuesday expansion lower, followed by Wednesday closing inside the range and expansion in other direction. So this is the midweek reversal. Early days of the week expansion in one direction, midweek is reversing, and then we get Thursday and Friday expansion higher. The weekly candle will be an open low high close, but with a large wick or a reversal candle. Now the third is consolidation reversal profile. It follows the idea of the ICT power up 3 or accumulation, manipulation, and distribution. As you can see that from Monday, we're consolidating between the Monday high and the Monday low. Tuesday closed inside, then Wednesday manipulated the Monday's low, accumulation, manipulation, and then we are expecting a distribution the Thursday and Friday. If it is occurring on Thursday, then we are expecting only the Friday to expand in other direction. It is simple. Now using it all together, you have to identify the current phase of price delivery, the swing point formation, and using the next day model or the TTrades Fractal model, and then adding the weekly profile for the additional information. And now we will go over the examples. We will cover it only on the daily chart, and in the second video we will combine it with the intermediate time frame, how to confirm the change in the state of delivery after confirming the daily bias. So we will go over the examples hopping into the trading view. Now here we are with the NQ daily chart, and we will use those components mechanically to determine the bias on the daily chart only. And in the next video we'll combine that with the intermediate time frame perspective. On the right side I have the weekly candle, which will be used for the purpose of the weekly profile and the formation of the weekly candle. So now we are at Friday, June 27th. We are in a continuous expansion, and the Friday's candle the previous week is ended in expansion, so we could expect a next better price delivery because of the continued expansion. So letting the Monday's candle print. On the Monday candle, we have unestablished low of the week. We expanded higher, but we have no week, which is not good. It can be revisited. So on the Monday candle, we are kind of have a small expansion candle. Mechanically, we can expect a continuation higher, but since we are in a large expansion, we wouldn't expect that. So letting the Tuesday candle print, we have kind of a retracement reaching into this fair value gap, which is that internal range liquidity. So now mechanically using swing points, we can expect a continuation lower, but since we are inside this fair value gap and after large expansion, we get that retracement phase, we can expect some kind of a bullish candle. And now we have a Wednesday taking the previous day low, closing inside the range and printing bullishly, and we have failure swings on the highs, so we can expect a continuation higher. Monday, Tuesday lower, Wednesday midweek reversal, and now Thursday expansion higher to these failure swings. Now the Thursday candle expanded into these feather swings, and with this we can also expect a Friday continuation higher since we have Wednesday low of the week. The weekly candle is supporting expansion, so we could expect a Friday continuation. And the Friday candle was a bank holiday, and we get the Monday candle, which is gapping lower, and it is taking the previous day low. And now mechanically we can expect a continuation higher, and from the weekly candle we created the high, then expanded lower, but we are closing inside the range, so we can expect a continuation higher. We get a bullish candle, but we haven't reached part of the previous day high yet, so this is kind of a consolidation, expansion, met with expansion, and now we have a consolidation and our further price delivery. Either this will be a manipulation with expansion higher, or a consolidation range high taken, and then expansion lower. So letting the next candle print. Now with the next candle, we have closed above the previous candle, making it as a propulsion block. We have this order block into a fair value gap, then down close candle into that. Now we have closure above that candle. So now we can trade into this feather swing or equal high, and our bias is bullish. And the next candle kind of consolidated with the Monday low. We're expecting Tuesday, Wednesday continuation, and Thursday also continuation, but the Thursday candle kind of was an indecisive candle, so we can still expect this Tuesday high or the Wednesday high to be visited because these are kind of feather swings. And with the Friday candle, we have invalidated that idea. So reaching this high, we are kind of reversing lower. The Friday candle, we have closed inside the range of the Thursday candle, and now we can expect a continuation higher on Monday. So when always I'm starting a new week, it's good to let the Monday candle print or decide what it is doing. So letting the Monday candles print. Now with the Monday's candle, we took bunch of feather swings, and we are closing bullishly, taking the previous day low, closing inside the range, and also creating potential low of the week. So we are expecting a Tuesday continuation higher, and we have bunch of feather swings. And with this, the Tuesday candle reached the highs, took those, but it closed super bearishly inside the range. So we now have a candle to closure. Monday expansion higher, Tuesday reversal. So we are expecting Wednesday continuation lower. And with this, we get a continuation lower, a large wick, and it also closes bullishly inside the previous candle's range. So mechanically, now we can expect a bullish bias because this candle has closed above the previous one and it has a large wick, expansion, mid expansion on the lower time frame. If we are disrespecting the 50% of this wick, we can get a continuation higher. And with the Thursday candle, we expanded higher, Monday low, and Thursday expansion higher. Now we can expect A Friday return back into the range or a continuation using the weekly profile, but the weekly profile aren't magic. It can be capping the weekly range, printing the other side of the weekly candle, or it can continue higher. We can confirm those by the lower time frame, which we will be going over in the next video. And the Friday candle did take the previous day high and close inside the range, creating the other end of the weekly candle with a Monday low with a swing point, then whole week expansion, and Friday creating the other end of the weekly candle and closing back inside the range. Now for the next day, we have mechanically a bearish bias, but also we have this fair value gap, which can be used as a retracement to continue higher. So letting the Monday candle print. Now with the Monday candle, we have let that fair value gap empty and we expanded higher, closing above the previous day high. With this, we are expecting a continuation higher mechanically. And with the Tuesday candle, we kind of reversed and we tapped into that fair value gap. Also, we can now expect a retracement higher because we are taking this range low inside the fair value gap. Mechanically, we are bearish. Like we have closed below the previous candle, we can expect a continuation lower, but with this wick and inside the fair value gap, we could also expect a bullish bias. In these cases, you can use the daily profile to confirm your idea, but if you will let the next candle print, and as you can see from this fair value gap, with this candle almost closing inside the previous candle, we get a continuation higher. So this is that classic external to internal and now internal to external. So this is now our target, a feather swing or the Monday high. So in this case, we had Monday bullish candle, Tuesday low, Wednesday continuation higher, and now we are expecting the Thursday to continue higher. The Thursday candle was kind of a consolidation candle and it is leaving these feather swings, but it is kind of a reversal candle, so we can expect these equal highs to get taken. So we are expecting the Friday continuation. And the Friday candle did continue higher, which is also creating a propulsion block. This is the order block, and this down close candle is reaching into this order block, which is a propulsion block. So now going into the next week, the bias is obviously bullish. And with the Monday candle, we gapped up. We don't have a bias yet because this candle have equal wicks on the each sides, which is the signature of the consolidation candle: open, low, and then close in between. So this is like a consolidation candle, which can be viewed like this on the lower time frame: open, high, low, and then closing near the opening price. So now we don't have a bias, so letting the Tuesday candle print. And by letting the Tuesday candle print, we have taken the previous day high, and now we are expecting a continuation lower. We also have this feather swing with the Tuesday high and continuation lower, but we also have this gap which can be utilized as an internal liquidity to support it higher or expand higher. So letting the next candle print and letting the next candle print with the Monday high, we created the low of the week on Wednesday inside this gap or this propulsion block, and now it is expanded higher, closing above these two down close candles, which is also supporting a bullish continuation. So for the next day, our bias is bullish. And with the next day, we had a bullish bias. We expanded higher, but we had an immediate reversal lower. And now we are closing below this up close candle, which is that order block. And now we can seek a continuation lower. And we had a huge expansion candle lower, taking all these feather swings and these two. So now we had Monday candle consolidation, Tuesday consolidation, kind of seek and destroy, which is also a kind of consolidation. Then Thursday taking its high and expanding lower, candle 2 lower, candle 3 expansion lower, which is Friday. And on the Monday, we can like see another feather price delivery because these candles are huge compared to these all candles. So after large ranges, we are getting small ranges. So waiting for the next feather price delivery, letting the Monday's candle print. And with the Monday candle, after reaching these lows, we have expanded higher, reaching into this fair value gap, a tiny one, which is that internal range liquidity pool. We can get some sort of reaction lower or a continuation higher based on the candle closure. Mechanically, we are closing barely above the previous candle's high, so we can get a continuation, but we are inside the fair value gap, so we can get a reversal lower. So letting the next candle print, we had that reversal from this fair value gap, taking the previous day high, closing inside. Now we can expect a continuation lower for the previous day low. This kind of that expansion, mirrored expansion, reversal. Now expansion, mirrored expansion, reversal in the opposite direction. So we can either see a continuation higher. If we get a bearish candle, then we will see a continuation lower. And with the Wednesday candle, we took the previous day low, closed back inside the range, and closing above this down close candle, which is not reaching into some point of interest, but we can get a continuation higher mechanically because we are closing above the previous day high, and we are having a candle 2 closure. Now the Thursday candle closed above the previous candle high, candle 3 expansion. And you can see the weekly candle, we have a weekly low, small wick, expansion higher. Now we can also seek a continuation for the Friday's candle. And the Friday's candle also expanded higher, closing above the previous day high. Now we are near the all-time highs again, so we could expect a Monday gapping up or something. Now the Monday candle took the previous day high, created potential high of the week, and now expanded lower. So mechanically, we can aim for the previous day low. And we have expanded higher without taking the previous day low, which is a failure swing. Now with this expansion higher, we are now expecting a continuation higher for the previous day high. We get that continuation higher. First, we had a Monday low, then we have a midweek reversal, expansion, and then midweek reversing the whole weekly range. Now we can get a continuation lower, a candle 2 closure using the 50% of the wick to get that continuation lower for the previous day low and open high low close candle. And now we get a continuation lower on Thursday, but we have kind of a conflicting buys here. We reach into this fair value gap, which can be used as a retracement higher. And also we have a kind of 2 closure. So mechanically our bias is bullish with the Monday low and retracement followed by continuation higher. But since we have a strong candle 2 closure here, so letting the next candle print, and the next candle invalidated that idea, the Friday's candle, it closed below this fair value gap and validating the idea of the bullish bias, which is the first reversal signature and uses an inversion fair value gap, expansion, met with expansion. Now we can expect the Monday candle to go lower mechanically to go for the previous day low. The Monday candle went for the previous day low, but since we are below that fair value gap, we can see a continuation lower. But this is kind of that reversal candle. As you can see, we opened up, created the high, then we went lower and then closed in between. So this is a lower time frame consolidation. So we will let the next candle print, and the Tuesday candle expanded lower, taking the previous day low and also closing below this up close candle, which is reaching into all-time highs, and this high right here, expansion, met with expansion, a reversal. So now we are expecting a Wednesday continuation lower. And the Wednesday candle did continue lower, and now this is the end of the price action. So now for the current day, After a large expansion, we are expecting a next further price delivery, and also we have taken this relevant low. If we are respecting the 50% of the wicks, this can be used for a reversal higher, or we can get through the previous day high and get that continuation lower with the Monday high. So this was it for the NQ. Now we will go over the EURUSD and use these components to mechanically define the daily buys. Now here we are on the EURUSD daily chart. On the right side, we have the weekly candle, and we will use those components to define the daily buys mechanically. And one thing more, these ideas of the MMXM next day model, the weekly profiles, the fair price delivery, are the things that I'm teaching. These are not guaranteed. Like we can get the candle 3 expansion always. We can get a reversal candle and then invalidate that idea. This is just a probabilistic guess or educational guess. This is not like something guaranteed. Now going into the EURUSD price section, the previous week close kind of bearish. We had expansion, mirrored expansion, a weekly reversal candle. So letting the Monday candle friend to give us that idea. The Monday candle expanded lower, taking the previous day high. Now we can expect a continuation lower according to the next day model with the Monday high, Tuesday continuation. And we get the previous day low, but we are kind of closing bullishly. But this is that indecisive candle. If you look at the shape of it, it is creating opening, then creating the low, then going higher, but failure to continue and closing in between the low and the high with the kind of equal wick size. So this is that indecisive candle. So we will let the next candle print to decide that. Now the next candle is consolidating in between, but we do have this candle bullish closure reversal. So we can expect a continuation higher if we disrespect the 50% of this wick. And we reach into the 50% of this wick and we had a bearish candle, candle 2 closure. So for now, this is kind of a conflicting bias. If you can see that we took the previous day high, closed bearishly, closing below the previous day low, but also closing inside the range. So this is like that candle taking the previous day high, also the previous day low, equal wick size. So we will wait for the next candle. Now the next candle confirmed our idea. The Tuesday, the Monday candle created the high of the week. Tuesday, Wednesday, Thursday continuation, and Friday close lower, disrespecting the idea of the bullish bias. Now we will let the Monday candle print to decide the next week. The Monday candle closed below all these filler swings, which was obvious. Now we are seeking the previous day low. Now with the Monday high, the Tuesday continuation lower. But since we have a large expansion, continues 1, 2, 3, 4 days of expansion, we cannot trade the continuation lower. So we would wait for another fair price delivery. Now we have a Monday high, Tuesday expansion lower. So waiting for this next fair price. Now, as you can see that we get kind of a retracement because we expanded lower, then expanded higher, but failure to close bullishly. We took the Monday's high, creating the new high of the week, and we are closing pretty bearishly on the lower time frame. This will look like open, then low, then high, and now closing. So this is a large reversal wick, which is a reversal on the lower time frame. So we can see continuation lower. And now with this, we get a continuation lower, but mechanically, candle 2 closure, candle 3 expansion higher. This can be used as a retracement purpose because the overall trend is kind of bearish. And with the next candle, which is Friday, we get the bullish candle, open, low, high, close, but also taking the Thursday high and closing inside the range, which is suggesting the Monday's candle to be an open, high, low, close, or a bearish expansion candle. Is respecting the 50% of this reversal. And now we're expecting Monday candle to expand lower. And the Monday candle invalidated that idea, and it disrespecting the 50% of the previous candle's wick and expanded higher. Now with the Monday candle closing above this order block, Now we can expect a Tuesday continuation higher because we have a bunch of failure swings. Now the Tuesday candle expanded higher, closing above the Monday. We left this failure swing too. And now we have expanded into that failure swing, but what you can see is we have continuous 4 days of expansion: Friday, Monday, Tuesday, and Wednesday. So we cannot trade another day of expansion higher, so we would wait for another failure price delivery. Since we have failure swings above, we can expect a continuation higher, but also waiting for another failure price delivery. And as you can see, we took the Wednesday high and now closing inside the range with a bearish candle. So we can expect a continuation lower part of the previous day low. And the Friday candle did reach into this previous day low. And now we are closing inside the range. So we would expect the Monday candle to expand higher or create an open low high close candle mechanically. And the Monday candle invalidated that idea. It took the previous day high and now closed bearishly. 1, we have a V-shaped reversal, expansion, mirrored expansion. 2, we have a candle 2 closure. And 3, we are closing below the consecutive series of up close candles, which is suggesting that reversal or change in the state of delivery on the higher time frames. So we could aim for this low or a continuation Tuesday lower. And now we get a continuation lower on Tuesday upon reaching the lows. We are failure to manipulate these lows and we are closing bearishly, so we can expect a Wednesday continuation lower. But since we are in a continuous expansion, I cannot trade the next day. We would wait for another failure price delivery. Now with the next candle, which is Wednesday, it also continued lower. We had a large expansion, so we would now expect a next failure price delivery on Thursday. And we get that consolidation after reaching these lows. We get another failure price delivery. Either we get a continuation lower from this fair value gap, internal to external, or we get a consolidation, manipulation, and expansion higher, or taking the previous day high and continuing lower. And we get that consolidation, manipulation, and expansion higher, disrespecting this fair value gap, which is the first signature of the reversal. So we have expansion, mirrored expansion. And now this is the Friday candle. So for the Monday candle, we would wait for the next failure price delivery. Now on the Monday candle, we are consolidating, kind of leaving failure swing above us, equal highs. So for the Wednesday candle, we can expect a bullish continuation higher, since it is not closing above the previous candle or closing below the previous candle, so we can still expect a continuation bullish. Now the Tuesday candle retraced into this fair value gap. We have a candle 2 closure, Monday candle opposing run, Tuesday low of the week, so we can expect the Wednesday continuation higher, candle 3 expansion, respecting 50% of this week. And now we get that candle 3 expansion higher, Monday low, Wednesday expansion. Now we can also expect a Thursday continuation. And we get a Thursday continuation higher, but kind of closing inside the range. It is failing to close above the previous candle, so we could expect the Friday return into the range. And the Friday did return into the range using the 50% of that wick. So with the Monday low inside the internal range liquidity, we went for the external range liquidity, and now TGIF are capping the weekly range with the Friday. So now skipping it into the Monday. And the Monday's candle, we are kind of inside this fair value gap. From the external range liquidity to the internal range liquidity, taking this low. Mechanically, we are closing below the previous candle's low. We could expect a continuation lower. But since the fair value gap is kind of holding the price section, we could expect some kind of a retracement into expansion higher, because the trend is bullish, expansion, mirrored expansion, retracement, another expansion. And as you can see, we closed above these consecutive series of down close candle. We had a bullish continuation on Tuesday. Now we can expect a continuation higher on the Wednesday to this feather swing. We get a Wednesday continuation higher with the Monday low, Tuesday, Wednesday expansion, and expecting the Friday or Thursday to cap the weekly range. We are closing above the previous candle, so we would expect the Thursday candle to expand higher. And the Thursday candle printed bearishly to reaching this high. We had a reversal. Thursday continuation lower. Now we can expect a Friday to do the same and close below the previous candle's low or reach part of the previous day low. And the Friday's candle is in between the Thursday candle. Now we are in a consolidation from this range high to this range low. And now this is the current price section within that consolidation range. We cannot decide where the price is going. So this was the idea of mechanically defining the daily bias and clearing with doubts about the daily profile, which are not some magic to the daily bias, and also about the closure. The closure can give you the narrative or the probability that according to the swing point, a candle 3 could expand in certain direction, but that is not it. You can confirm that by the lower time frames daily profiles, high or low of the day, confirm swings or protected swings, and establish highs or low of the day, and then trading the swing points using the change in state of delivery, which will be the topic for the next video. So for this video, you have learned that using the feather price delivery, the swing point formation, the MMXM's next day model, and things like that, you can confirm your bias with that. Hope you guys have learned something from this. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next week.